So,
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So the CoinDesk indices price index for Bitcoin XBX is at 47,156. That's more or less flat on the day. The CoinDesk Ether price index, ETX, is at 3,821. That's up 2%. And the DFX, CoinDesk's DeFi index, is up 7.51% from 24 hours ago at 535.32. So joining us to discuss markets is Greg Magadini of Genesis Volatility. Hi, Greg.
Hey there, how's it going? Thanks for having me on.
Welcome to the first show of the year. So everybody's out there giving their 2022 outlook. You know, this is sort of a common theme of obviously the beginning of the year, but there's a lot that people are looking to, and a lot we're looking back from 21. What do you see as the big issues facing crypto investors in the next 365 days?
Yeah, absolutely. So one of the big themes that we're seeing is sort of the macro backdrop here in the US. So any sort of Fed rate hikes to sort of tame inflation or combat the inflation narrative theoretically will have a negative impact on risk assets in order to bring inflation down. So this fear around how that's going to affect crypto markets is really like in play right now. And something that we've seen over the past month, over the month of December, is that we did see sort of demand for puts coming in with a higher implied volatility and realized volatility in the first half of December, which showed that people were hedging this potential macro risk. In the second half of December, throughout the holidays, we were really giving this blessing where implied volatility across both Bitcoin and Ethereum has come down significantly, and there's been some sort of optimism back to the option skew where now calls are relatively more expensive than similar priced puts. So this gives a real good opportunity for people to hedge their books going into 2022 and potentially stave off any losses in their portfolio from these rate hikes going on later in the year.
So the macro theme is the big one. That's bringing volatility into the mix. Notably, the price of gold actually had a really bad year. It's actually seen its biggest drop, largest percentage decline since 2015, which of course seems a little out of whack with the idea that we're entering into an inflationary period. What does that say about Bitcoin's capacity to play what is often referred to as an inflation hedge role? You know, it too, of course, being affected by, as you were saying, this interest rate outlook.
I think that's a great point of comparison. So gold's been a big question mark all year. We went into the year with really strong gold prices. We got above 2,000. Now we're hanging around 1,800. So everyone was buying gold as the inflation hedge, and that's been such a large underperformer. Part of the reason that we saw this underperformance, a lot of people are speculating that the potential inflation hedger is turning around and buying crypto instead of gold. So that could be a potential reason why gold has been an underperformer. I do think in the long run, gold could be interesting, but it has been a huge head scratcher all year, and sort of like the obvious play that maybe people were too positioned long gold that it became a nice target for short sellers to kind of get people to puke out their positions.
You know, Greg, Happy New Year, of course. Welcome back. I wanted to ask you a little bit about the options that you were just talking about, because we had about $6 billion in notional come due back last week at the end of December. Do you think some of that was at least put on throughout the year with people taking on these low delta positions, these wild low delta positions that, Bitcoin's going to hit 100,000. So they took that bet back in say January and February, paid a lot because of theta and just kind of let the thing expire and it went nowhere. Do you think that we've sort of like gotten that out of our system? We've got this low volatility in place now, lower relative implied vols now. Are we kind of just sort of floating around? Because if the put call ratio is going down and it's sort of evening out, is it sort of like a nowhere market?
So Happy New Year, Lawrence. Thanks a lot. I do think there's a great point to be said here. So December has been rather expensive going from Q4 all the way into expiration. And a lot of the market makers that we talked to were saying that December, has 1 year of life when it was first listed. And so, like you said, people were buying contracts in December, and market makers were naturally net short that volatility. So what happens is that market makers are less willing to come in and keep selling these December options because their book is already leaning that way. So now that we've cleared that out, we've had a huge options expiration, and market makers can reset their books. That does play nicely for market makers to be able to come back into the market and start selling volatility again now that their books have been reset. I do think overall, though, the realized volatility could go either way, especially with this sort of macro backdrop. So we could see some volatility again in the future.
Speaking of which, we saw obviously there was a drop in realized volatility over the past few months and what have you, compared to, let's say, what we saw over the summer to now. When we look back, though, at the returns on Bitcoin adjusted for volatility, it's relatively lower than if we had taken on a leveraged position in the S&P 500, let's say. And you'd see even a 2x position in the S&P 500 would have maybe outperformed Bitcoin with lower vols, something simple as that. Do you think we're going to get that happening, or are we going to finally see Bitcoin maybe give higher returns than the risk-adjusted return in the S&P 500 and other equities?
That's a really interesting point of comparison. So I think one of the things that's been attracting a lot of crypto holders and investors is that there's also the component of yields in crypto that we're not finding anywhere else in traditional finance. So things like USDC, which have basically zero delta risk, are yielding 9% on places like BlockFi or Genesis Trading. And then we have crypto yields as well from being farmers in liquidity pools, earning new tokens. So I think that component of it still attracts people to sort of take on this risk in the crypto space, even though the price-adjusted returns might not be as amazing as we'd hope. I think if you add in that yield component, it becomes interesting again.
On that note, Greg, maybe drill down a little bit more into what the outlook for DeFi is. We've had it certainly didn't have such a great year, obviously after some big run-ups. Selling off, coming down, you see it with our DFX index, but a bit of a bounce back now as we go into the end of the year, 7.7% up just on the last 24 hours. What's happening there? Are people now seeing this as a diversification play? Is this just sort of bouncing back from low levels?
Yeah, that's interesting. I don't know if I have a strong opinion on the price point of DeFi coins, but I think from an industry development standpoint, there's a lot of interesting things going on. So we have DYDX launching their perpetual futures on chain. So that just came out. Now we have some new projects on Solana being built, Zeta and Friction, who are launching options product directly on chain. And then we have sort of new option projects on Ethereum layer 2s and side chains, such as Siren and Oz and Pause and Open. So I think the derivative space on-chain derivative space, the DeFi derivative space, is going to continue to grow over the next year. And I think this is really a point of very interesting activity going on. People can now hedge their coin exposure directly on chain in a way they weren't able to do before, beyond just lending protocols such as Compound. So I think the space is going to continue to grow. As far as individual tokens, one of the big questions there is that people keep listing new tokens. So there's every DeFi project pretty much has a token associated with it. So the supply of new tokens probably hampers down the price over time for the overall DeFi prices.
Yeah, but speaking of alts, I mean, are there any that you're particularly, let's say, enthused or would say, hey, but I want to allocate a little piece of my portfolio into this because I think these might be winners? I mean, is there another Solana in the works, or do you think Solana itself might be something worth exploring? Any other alts, the other platforms, et cetera, that you think will be potential good bets in 2022?
Yeah, I've sort of been a consistent fan of Polkadot. We've seen some nice developments in Q4 of this year where we had Polkadot launch their crowd loans finally. We have things like Moonbeam or Glimmer tokens coming online and basically being EVM compatible on Polkadot. So it's going to allow people to start merging their DeFi projects over to the Polkadot chain and have lower transaction fees and higher throughput. So I do think this is an interesting chain. It provides a lot of the same value propositions as Solana or Ethereum. And so we'll see how that goes.